Hello traders, John Hayden here with another daily revision. Let us begin. Before we start, as always, I suggest you stop the video and read the general risk warning. It is very important for your knowledge to understand the risks under trading. Moving on to upcoming events. All events are taking place in GMT hours. I recommend you write the events down in your calendar so you would be able to trade and notice them before and after the announcement. After Fed's decision yesterday to keep interest rate on the same level, I will talk about it in the next slide, we should not expect a lot from the economic calendar, at least until the end of the week. However, we should look for better results in the US economy until the next interest rate meeting. I will explain it in the next slide. In conclusion, short-term trades on the dollar can be a very good advice. Remember, the dollar is very strong now, so don't go against its direction, even if for the short term, due to any report it shows something else. Remember a phrase, the trend is your friend. US market. Yesterday Wall Street ended very positive, climbing by almost 1% after Fed's decision to keep interest rate. And it is expected the rate not to change yesterday. However, the Federal Reserve gave a possible hint we should see higher interest rate until the end of the year, mentioning it's probable to see it even in the next meeting. A little bit of a background, last time the Fed postponed the decision came from weak US data and China slowing growth. However, they expect now better reports until November, and China already lowered the interest rate in the country, plus the easing plans are on the line to keep stimulating the economy. For now, due to the Fed's call to keep interest rate until the next meeting, the US stock market climbed, but also the US dollar showed higher numbers, and usually in interest rate decision they tend to have negative correlation. But this time the US dollar jumped higher as we expect interest rate to increase until the end of the year. As you can see below, this is the SP 500 daily chart. We are climbing higher. Look at this beautiful trend upward, but we're not sure what to expect until the interest rate. For the short term, we see stronger and positive market, but for the longer ones, we will talk about it in my next revisions. Earning reports. We are still in the middle of the third quarter report session. Here I will keep you updated with important events. These reports will either help the market to reach higher highs, or it will cause hard time for traders to set a direction. Easy day, not a lot is expected in the report session today. However, we don't need the volatility from the report zone as well. We already got high moves from yesterday's Fed's decision, which can give us very good possibility for short-term trades. If you want to see who is reporting every day, you can write in Google earning reports calendar. It will bring up detailed charts with upcoming reports. Commodities. Gold. The price of the precious metal fell down hardly yesterday to almost 2-week low after the Fed decided to postpone the decision one more time and gave hint on a possible rate hike until the end of the year. As I said before, I don't recommend trading the gold now, as uncertainty whether it will go higher or lower is still on the line. Focus on stocks, forex, or other commodities. Crude oil, patience pays off. In my other revisions, I said we are now on a support area. This area usually is a sign for possible buyers to enter, and that's exactly what happened yesterday. The crude oil was waiting on the support level for any report that would trigger the upward movement. This time it was the crude oil inventories, which showed poor numbers against analyst forecast, or in other words, less supply, higher prices for oil. In conclusion, great opportunity to trade oil as things seem very positive for the commodity, at least for the short term. Here you can see from the left, this is the gold's daily chart with a big red candle, not showing a possible direction because we are on a support area, which is a sign for buyers to enter. By using the fundamental analysis, we can see the poor results for the gold are not showing any positive sign. Therefore, leave the commodity aside. However, in the crude oil from the right, you can see we are on the support level, and as we bounced on this level for almost 5 times before, we also bounced this time, and with a beautiful green candle upward, and we should at least see movements toward the moving average here, and if we will break it, maybe we will see higher highs for the commodity. That's it for today, guys. If you have any question, you can contact me by email, binary options reviews, and I'll see you again tomorrow.